The stock market is getting crushed. Real estate is getting crushed. Tech stocks are getting crushed. Crypto has gotten crushed. You know what? Even humans are getting crushed with AI taking over the web. And inflation is still hotter than the Fed wants it to be, so rates continue to rise. What are you supposed to invest in 2023 with all this bad financial news? Hi, I'm Jacob Wade from Roadmap Money, and I've been writing about money since 2012. I've been doing it professionally for a couple of years now. I'm a former licensed tax professional, and I'm just an overall money nerd. And so when I see what's going on in the market, I get interested in what are the alternatives. So I've actually dug around to find out where can we park our money that's safe. And I found the top 3 risk-free investments that you could put your money in right now and actually get a decent return. In fact, because the Fed is raising rates and it's crushing all of these other sectors, there are some really nice, safe investment opportunities that have emerged and are paying a decent yield without putting your money at risk at all. And these are attractive investment options for people that don't necessarily want to risk it in the market right now, but can't afford to put their money on the sidelines earning nothing in a checking or basic savings accounts. Some of these options do take a little more work than others, but make sure to stay until the end where I reveal my favorite risk-free investment option. Okay, so what do I mean by risk-free? Well, there's always risk when you invest in something, but in the investment world, something is considered risk-free when it's backed by the US government. Basically, you can't lose your principal investment. And the only way you lose that money is if the US government goes under. And if that happens, we've got bigger problems. So these are the safest investments you can make. So these 3 types of investments we're going to go over don't have a risk of loss, and they also pay a guaranteed rate of return. So number 1 is I bonds. So Series I savings bonds, or I bonds, are inflation protected securities that pay a fixed interest rate that is repegged every 6 months based on where inflation is at. Everybody knows that inflation is hot right now, and it is slightly coming down, and we just kind of missed the peak. But at one point, these were paying 9.62% interest. And currently, they're paying 6.89% interest over the next 6 months if you lock it in before April. So that is a great, great investment. And you only need a $25 minimum, and you can do this all online. So what are some of the pros and cons of I bonds? Well, some of the pros are obviously the 6.89% interest rate that's risk-free. You're not really going to find that anywhere else. And the cool thing is they keep up with inflation. So as inflation still kind of remains hot, these are going to pay a rate that helps you keep up with that. So it is going to pay a decent return until inflation goes down. And the cool thing is that they compound every 6 months. So what happens is it pays out like a little monthly interest rate into your account, and then they take that money and they put it back into your I bond balance. So now you're earning your interest rate on a higher balance. So it does have a compounding effect every 6 months. All right. Some of the downsides are you are locked into this investment. So at a minimum, you got to lock it in for a year. You cannot touch the money. Just pretend it doesn't exist. But if you pull the money out after a year, but before 5 years, they're going to penalize you for that. So they really want you to invest for at least 5 years. So if you pull it out, say you get through that year and then you need the money, they're going to just take away 3 months worth of interest payments and then pay out the rest. The other bummer is there's only a maximum of $10,000 per year per person. So you and your spouse could each do $10,000. You can pull in money from a tax return and roll it into I bonds as well. But for our purposes today, we'll just say it's got a $10,000 per person cap. And kind of the biggest downside to I bonds is their rates rise and fall with inflation. And unfortunately, we are kind of on that downside of inflation. So even if you lock in a good rate now, you're stuck with the thing for a year. Maybe you get 6.89% now for 6 months, but it repegs at, let's call it like 3 or 4%. And then it repegs again. And then as the Fed crushes inflation, these things go down and down and down. And then finally, you have to sign up online using the Treasury Direct website. You can't get it from a broker or anywhere else. And the site's, let's just say it's a little antiquated. So that's the downsides of I bonds. All right, risk-free investment number 2, T-bills. U.S. Treasury bills, or T-bills, are short-term debt obligations backed by the U.S. Treasury Department. They can be purchased for $100 or more, and then they have a fixed duration until maturity. T-bills can be bought in durations of 4, 8, 13, 17, 26, and 52 weeks. So again, like 28 days up to 365 days. These are meant to be short-term investments. So the idea is that you're actually buying them at a discount and then you get the full payment at maturity. So think about it like buying a $100 bill for $99.75. You'll get that $100 after 4 weeks or 8 weeks or 13 weeks, but you're buying it for a discount up front. And then it will automatically deposit into your bank account, or you can have it reinvest in itself for up to 2 years. Now, typically the longer the duration on a T-bill, the higher the rate, but because the rates are flying up so quickly right now, you're actually going to get a better return on some of these short to midterm T-bills. And I'll show you that here in just a second. All right, so I'm going to pull up the latest auction results from T-bills. So as you can see here, the 13-week, 26-week, these 4-week, you've got the investment rate, which is basically your return on investment. And so what happens is it's auctioned off at, let's call it a 5% discount. You make that purchase, and at maturity, you get that full 5% in return in the total value of what you purchased. Now, the issue date is when you can purchase it at auction. The maturity date is when it actually gets paid back into your account, or again, you can compound it back into itself. So this is the current investment rates. As you can see, they're pretty good. So what are some of the pros and cons of T-bills? Well, as I just showed you, current rates are around 5% for some of these things. So that's a great short-term place to park your money, and you can earn that return guaranteed. And you can roll that interest back into itself for up to 2 years. So you kind of have a compounding vehicle there. And then finally, T-bills are exempt from state and local taxes. So that interest you earn is tax-free on your state and local taxes. There is federal tax, so you will still have to pay that. But if you're in a state with high income tax or a locality with high income tax, it's exempt. Now, what are the cons? Well, the system is just a bit complicated. You need to know, okay, how long can I lock my money up for? I'm going to buy a 4-week or an 8-week or a 26-week. And then you need to know when is the auction date for that. And then you have to go in on that day and make sure you make that purchase. And then once you make that purchase, you need to wait, and then it deposits into your account. So unfortunately, the Treasury Direct website isn't the easiest to navigate. And as we're seeing right now, there's interest rate risk on some of these. So if you had purchased a 26-week, a 52-week T-bill, and then rates started going through the roof, well, you're locked in, say, like a 3% return. Well, these are 3.5, 4, 4.5, 5. They're going up, and you're locked in over here. So there is what's called interest rate risk on T-bills. And then if you do want to do that reinvestment for up to 2 years, you have to buy the same exact type of T-bill, the same duration. So if you got a 26-week and you want to roll it in, it can't roll it into a 4-week for another little short-term investment. You got to roll it into the 26-week. Again, it has to be identical. And then finally, your money's locked away. So if this is like a short-term loan to somebody, that money's not there. So if you are in the 26-week, the 52-week, or even the 13-week, just kiss that money goodbye until that duration has completed. You cannot access the funds early. So those are Treasury bills. All right. And the third risk-free investment, and this is the one I'm really stoked on, is a high yield savings account. Now, a high yield savings account is just like a regular savings account, just pays a higher interest rate. I will say back in the day, high yield savings accounts had some restrictions on them on how much you could transfer in and out, how many transfers you could make, but that has been done away with. And so it really just functions like a really high paying regular savings account. And the cool thing is there's no time limits. There's no money lockups. There's no hoops you have to jump through. Your money is always accessible, 24/7, liquid. It really just is another savings account. And there's none of these other hoops you have to jump through like you would with the other investment options. Now, if you're interested in the top high yield savings accounts, I've got a video here showing you the top 7. And even in that video, rates have changed already because the Fed keeps ratcheting up rates. And so these accounts start ratcheting up their interest rate that they're paying. So you can check that out here, or I'll have a link in the description below. Now, there are hundreds of banks to choose from that have high yield savings accounts. But honestly, I think CIT Bank is crushing it. And I've been using them for a few years. Now, I'll be transparent. The rates were terrible a couple of years ago, right? The Fed dropped rates to basically nothing. So savings accounts and high yield savings accounts were paying less than 1%. Well, the Fed has gone aggressive over the last year and has raised rates so high that these are actually an attractive investment option now. And CIT Bank is always slightly ahead of the curve. I remember getting these emails kind of before any other bank was sending emails out that said, hey, we upped our rates again. Hey, we upped our rates again. And currently they're paying 4.05% interest on their high yield savings account. That means if you parked your emergency fund in there, say it was 10 grand, and you just let it sit and did nothing for a year, you would have $405 of income from that, or about $35 a month of passive income for doing nothing, which is awesome. And we're saving for a house right now, and we're putting our down payment money in CIT because I didn't want my money to sit around doing nothing in a checking or regular bank savings account that doesn't pay much. And so we're actually going to be earning money through CIT ourselves. And in fact, a funny story about that is I just advised somebody recently that was getting maybe a percent and a half in their money market account, and they were frustrated. And I showed them the CIT Bank Savings Connect account, and by moving their funds over there, they're going to earn over $4,000 in passive income over the next 12 months just by making that one move. So honestly, if you are at a bank and their savings account is not paying 4%, it might be worth it just to move your savings, your emergency fund, your down payment fund over to CIT Bank, lock in that guaranteed rate of return. You might as well put your idle money to work, but without the risk. So some of the pros of CIT Bank are, of course, it pays 4.05% interest right now. And as the Fed is raising rates, they continue to raise their rates up. You can also open multiple accounts with them and name them. So if you want to save for some larger expenses like a house down payment, a wedding, a replacement car, maybe your emergency fund, you can open multiple of those accounts, put a name to them, and then you can set up transfers to them and then fund those accounts. And speaking of transfers, they make it really easy to do what's called a recurring transfer, meaning you can just set up an automatic investment into this high yield savings account on a regular schedule. So say you get paid and you're like, hey, I want to put $200 a paycheck away. You can go in there and say, every 2 weeks, put $200 a month, automatic transfer, boom, it's done. CIT Bank is FDIC insured up to $250,000 per depositor. Now, FDIC insurance will pay out any money lost. Say the bank collapses or goes under. FDIC will pay up to $250,000 of money you've had deposited in there per person. So this is a legitimate bank. It is backed by First Citizens Bank, and all of their stuff is insured. So it is really a guaranteed risk-free way to invest your money. And then finally, they're just a lot easier to use than Treasury Direct. They have a slick mobile app. You can open everything up and log in right there and manage all your money. And it just makes it a lot easier. Okay. And some of the cons are they don't have a physical location. They're an online only bank. So you're not going to be accessing ATMs or have like a debit card with this savings account. I mean, most savings accounts don't do that. But if you want to have access to the funds, you'll have to transfer them to a checking account in an ATM. Now, of course, you can transfer the funds and use them for online payments and all that kind of thing, but they don't have any physical locations. And then they also have a $100 minimum to open an account. Now, again, as we're talking about these risk-free investments, typically we're talking about an amount much larger than that, but I just wanted to let you know that they do have a minimum to open that account. So those are the top 3 risk-free investments right now. You can earn 45% on your money. And if you're not, you should probably do something about that. Again, the easiest way would be to just open a CIT Bank savings account and transfer any funds that are just sitting idle right now, not earning 4%. Just put it in there. And I'll have a link in the description below so you can grab a link and go sign up for them. Or if you want to use Treasury Direct, you can either invest in I-bonds or T-bills. I hope this video was helpful and showed you a couple of risk-free ways to invest. And if you're nervous about what's going on in the financial world, now you have a couple of ways to fight inflation and put your savings to work. I would love to hear from you. What are your favorite risk-free investments right now? Drop a comment below. And if you like this video, hit the like button and share this with somebody. If you know somebody that says, hey, where do I park my cash right now? I want to make sure it's actually doing something. We actually just have a good opportunity with rates so high. So feel free to share this video so they can get some information on how to invest. If you haven't already, subscribe to the channel. Got more great videos coming out on investing and budgeting and all things personal finance. Let me know what you want to hear about next. Again, drop it in the comments below. I appreciate you being here. Thanks so much.